All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here for about 100 minutes, a little over an hour and a half, and been an interesting open. We saw it open and just kind of grind on higher, and then flip on higher here, breaking up close to yesterday's highs, still about 6-7 points away, and now it's giving that up. And, I've talked that I'd like to be a seller into a morning rally, and we've seen the morning rally, right? We've seen the morning rally. Now we're seeing that volume or that bump be erased. It wasn't a bump on enough volume that I wanted to jump in right as it was happening. I want to see some confirmation. But ideally, we'll see the market bounce right here, 4 or 5 points, and then break the current level that it's at. And if it's able to do that, path of least resistance into the close is likely to be lower. Now, the question that comes up and, that I have to ask myself is how much lower, right? How much lower is it worth an option? Meaning, is a put option going to appreciate in value, right? If I come and look at the SPY and I come and just take a look at, just a 2-week option, right? And I come look at a put value, and I come in here, and it's 440 for the at-the-money puts, okay? Or just in the money, $4 for closer to at-the-money, right? It has a 48-cent delta, right? Okay, 48-cent delta. All right, well, what's the theta, right? Delta is how much the option's going to change per per dollar move in the stock. Theta is the time decay, right? And so we're going into a weekend. I'm going to have some theta come into this over the course of the next few hours. And bottom line is, to counteract the theta, I'm going to need the market to drop at least 8 points. And then after that, I'll make about 10% on my option per dollar drop. So if the market falls 30 points, I'll make 30% on my option. That's for a 30-point drop. Now, could it happen? Yeah, it sure could. Am I expecting that big of a drop? I'm not. So they're not paying very well. Right? That's just the bottom line. They're not paying very well. So I'm only planning to hold it today. So I could come into today's options and say, well, forget all that, right? And come in and buy, buy something like in the money, like the 277s, which are pretty much real value right now. They're going for 270, and if we cashed them out, they'd be worth 270. So they're trading for real money. The delta's $1, right? So if the market were to fall the S&P were to fall 30 points, well, I'd just over double my money, right? So a little bit better proposition there. But the risk factor is also significantly greater. As if the market rallies 10 points, well, I'm down 30% on my option, right? So you kind of see where that goes. I can kind of go in and alter my delta and my exposure based on the option that I choose. If I get that. But for me, the biggest question is, does the market really have a chance to sell off aggressively? Is 20 points going to happen, right? And so far as I watched some of the action today, 20 points, that might be aggressive. 15 points, yeah, probably a little more realistic. And so it's not horrible, but it's also not fantastic. And so as I look at it, I better have a perfect signal, to be able to go and do that. Overall, when we look at the metrics on the market here today, they're not bearish. Yeah, they're not bearish. We're not talking about this bearish metric market. We're not talking about something that is rolling over or anything like that. Yeah, there's some pockets of weakness here and there, but there are also some pockets of strength. But most things are pretty darn flat. Especially in the context of what they've been over the last 2 weeks. You look at things like Well, let's just take a look at the industrials, right? Today be considered a pretty flat day compared to the days it's had over the last 2 weeks. You look at the financials. Today is a pretty darn flat day compared to the last few weeks. And we have a lot of that out there. We have a lot of that out there. We do have some things that are on the move. Here today, Under Armour with an analyst upgrade, pushed up to that upper band. We have IBM with a little bit of news, helping to push it up here and push it into a new little high here. But most of those are news driven. We've seen a bunch of analysts come in on Apple and make comments on Apple here. But overall, most stocks still kind of in a very similar position and not moving anywhere close to their average true range, right? And so it's one where, those two questions that I posed yesterday are still very valid and still, at least for me, need to be answered. And, I better feel pretty comfortable with them. If not, I'm going to go into next week with my $3,000 and look to put it in play into next week's opportunities rather than into this week's, which kind of go into some of the drama from over the weekend and what transpires there. I don't think there are a lot of stocks out there where you can look at the price action today and say, you know what, today's price action means that it's now more bullish or more bearish. I think most of the price action, if the stock's been bullish, yeah, it's still bullish, right? If the stock's been bearish, yeah, it's still bearish, right? Under Armour, yeah, it's still bullish. AT&T, I'm still bullish on. It's not today's price action making me bullish. It's just the same price action that that has been. Microsoft, its stripes aren't changing today. JP Morgan, they're not changing, and that's the majority out there. Now, one bigger move that is happening out there is the U.S. dollar. And, this is kind of going to be sitting near highs ahead of, the trade war stuff. If you want to make a bet on the trade war and you want to look and say, hey, you know what, I think that this is going to come out and it's going to be a disaster, and you want to, take advantage of that, check out the UUP options. Because if there is no resolution, UUP is probably going to fly on higher. And if you look at the 26s for next week, they're going for about 10 cents. So it's not too bad there. You can get 2 weeks. You can get them for about 13 cents. And so, me personally, I probably won't make this trade for the challenge because I don't have a bias one way or the other. But I'll probably throw some money personally on one of these two options just for more of a lotto. And, hey, if something happens, great. If not, well, no big deal. So I'll be looking at that. You can also look on the put side of these and even look and say, you know what, is the straddle worth it? You can look at 2 weeks, the 26s, and it's not the best price straddle ever. But to expect a 2% move in the UUP over the coming 2 weeks after this weekend, I don't think is a big stretch. I think that's a 2% move is probably what's coming, maybe even a little bit more. And depending on what happens, right? If there's some sort of trade war resolution, we can see the U.S. dollar just get crushed. Right? And that's not because, the U.S. is bad or it has nothing to do with good, bad, or anything of that. It's the perceived value. If there is resolution, then it is perceived as a bigger economic boon for emerging market economies. U.S. dollar gets sold while their currencies inflate, right? Or reflate. It's the same thing as, with the euro. The euro's going down while the U.S. dollar is going up, right? There's a relative nature here, and it's one of those where if there is no trade war resolution, if there is no progress made, right, it's going to be looked at as a negative for emerging markets, and we're going to see those currencies continue to drop, and we'll see the U.S. dollar continue to continue to rise there. So that's one interesting way to kind of play some of the trade war stuff. I think Micron's another one. Which, this is a stock that could be sitting at 42 early next week. You say, well, what? Right? Well, if emerging market economies pick up, that's a really nice thing for semiconductors. And if it drops, well, to see Micron at 34 and retest 34 as it continues to have these lower highs and lower lows. Didn't set a lower low right back here, but to see it break and retest that low once again off of a lower high would not be a big surprise. So those are two ways to kind of get some exposure if you're looking for exposure, into the trade war element, here this weekend and some of the randomness of that, or if you have a bias, right? You've heard something or you believe something and you say, you know what, I'm very bullish or I'm very bearish. You can play it with, one of those two elements, because the options just are a little better priced for what you're going to get than what the SPY is or the IWM or some of the index trades that are out in the market there today. Okay, so those are two ways for that, but just kind of looking at other things across the board and how they sit and where they're at. I do wonder if there's still one more down leg in the energy complex. We see the XLE kind of popping up. We've seen a little bit of positive divergence within this group. But when we still see members of this group trading near lows, and, here's Halliburton, and let me just clean up this chart. But, here it is. I mean, it's had some minor bounces and then sold into a new low. I mean, it's just one of those that just looks destined to be breaking below 30 and to be trading in the 28, 27 level just from a technical standpoint. And, to see that happen here with Halliburton, there's just not been much to argue from a bullish standpoint. There's just been a few hourly kind of divergences to play, a few pops here and there. But the path of least resistance on Halliburton has just continued to be lower. And, to see it trade and break sub 30, it's not going to be a huge surprise here with it. Okay. So anyway, those are a few things that I'm watching, that I'm looking at here. I've not made any trades, here this morning personally or for the challenge. As I mentioned this morning, I'm just not a big fan of the environment. I think the environment's a lotto environment going into tomorrow, and today it's more of a day trade environment where you have to wonder if you're going to get enough movement to really pay off your option, and that's just not. It's always a tough environment for options. Don't get me wrong. It's never this is an easy environment for options. It's always a tough environment for options, but there's some environments, that come in that, you just know for a little bit, for a day or two, I don't want much to do with this one. And that's really kind of where I sit, with it. It's been a tough environment for options for weeks. We made plenty of trades here this week. I will continue to do so. So I don't want to, I don't want that, hey, I don't like the environment to sound like, hey, you know what, there's not trades, because there are. But for me, going into this weekend, not a ton I love. Not a ton that I love. A few that I can justify. Not a ton that I go, wow, this is a really nice setup. So anyway, before I hop off, I was asked to give my thoughts on General Electric, and so let's go take a look. Here's General Electric. It has just been lambasted. It has not had any sort of luck with the last pullback in the market. General Electric, it's the last thing fund managers are going to go out and buy because they don't know what the value is. And, even the CEO doesn't know what the value is here for General Electric. And you know what? I do think this is an interesting place to possibly buy. I mentioned at the beginning of the year that personally I got a bunch of General Electric. I was kind of playing that dogs of the Dow theory, and I was fortunate to be able to grab some and ride a couple bounces. But ultimately, I am out of the position, and I did take a loss, despite having some gains on some of the bounces and having some nice timing and adding some more here in April. But ultimately, on the whole, I didn't take much of a loss, but I ended up taking a loss, and I've been out since and just kind of been watching this drift down, and really just haven't had anything to get me excited about wanting to get in, right? It's just one of those where if we put on the volumes, right? If we just come in here and put on the volumes, they're absolutely massive, right? But we also have to keep in mind that the stock price is half of what it was. So to see double the volume, right, it's still the same dollar amounts trading hands, right? Yeah, the volumes are greater, but it's one of those where there were many more dollars trading hands back here in November on this drop in GE than dollars trading hands right here at the end of October. Even though the volume at the end of October was just slightly higher. There were many more dollars trading hand, almost double the amount of dollars that traded hands back here. So, yeah, the volume is elevated, but I don't think we can argue it's bottoming volume because on a relative basis, all it's really done is kind of double what the volumes were back here during the summer. And, stock price is half, so same dollar amounts being traded on here. It's still a company that I think needs a bad news bottom, and they just still haven't had it. They just still have not had it. They've had bad news. They've had bad news. And they've had bad news. But nothing that, kind of gives that bad news bottom element here to it. We have seen analysts, talking about it. We saw, Deutsche come in here basically getting bearish on it, cutting their price target to, I believe, 7 today. This is one that most of the analysts were very bullish on for a long time. JP Morgan was the lone wolf, basically saying, no, this company is in a lot of trouble. JP Morgan's been dead on. That analyst has made his bones, with this call on General Electric, and has been dead right. And now we've had analysts just having to jump on and lower their outlook, lower their talk, lower their price targets and everything when it comes to GE. Now there has been a lot of call buying going on in GE here lately. Right. In fact, these last 2 days, not today, but the last 2 days, been a lot of call buying, here in the stock. I know that some people take a lot of call buying as a very bullish sign. But that's not always true. And in fact, in some cases, it's actually a very bearish sign. When we saw huge put buying come into the market, well, when did the huge put buying come into the market into individual stocks, right? Did it come in right up here? Nope, not at all. The days where we saw just the news feeds lighting up with heavy put volume in this stock, heavy put volume here, heavy put volume here, heavy put volume in the SPY, heavy put volume over here, it was down here. And when we see really heavy put volumes come in, it's generally fund managers or hedge funds buying the puts so they can go and buy the stock. It's a bullish element buying protection. And in many cases, when we see stocks that have recently bounced or are bouncing, like a General Electric, it's not directional call buyers saying, ooh, I'm bullish on this stock. I think it's going to go to the moon. No, it has nothing to do with that. It has everything to do with short sellers getting a little bit nervous but not wanting to get out of their position, so they buy some calls to protect their short position. And we have seen a lot of this in energy here over the last month. We've seen a lot of this in GE. I think what was it on Wednesday? It was like a 11-to-1 put to call rate or call to put ratio, right? Where there were 11 times more calls happening than puts, right? That's just not necessarily bullish. Occasionally. And it generally happens with smaller names. Somebody knows something, buys a bunch of calls or puts, and boom, the stock moves. But most of the time, it's actually going to be the opposite. It's actually going to be, hey, when they're buying the calls aggressively, the stock's probably going down. When they're buying the puts aggressively, the stock is probably going up. And, so I look at the call action that we've seen in General Electric and think to myself, wow, that means the shorts aren't willing to get out yet. They're not willing to get out. They're much more willing to just protect it and continue to ride lower. So anyway, that's my thoughts on General Electric. It'll be an interesting one into the end of the year, and I think it'll be a really interesting one at the beginning of the year. Especially if you look at it in the terms of dogs of the Dow. But right now there's still just more changes going on, more transformation, so it's a fluid situation. And, it's not one that I look at and say, man, I can get involved right here and I have a huge advantage one way or the other. It's still a stock that has $4, $3, $2, and even lower possible here with General Electric. I don't think that happens, but I do not see a case for $30 anytime soon. I think $30 case is pretty ridiculous, but to see it snap back to 10, yeah, you could argue that in the valuations, but there's still too much going on for me to say, hey, you know what, that's highly probable, to happen out there. All right. So anyway, just my thoughts there on it. Okay. Alrighty. Well, thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.